Welcome to Boardroom Media. We're joined again this week by the CEO of XM, Peter McGuire, for the XM.com weekly market update. Pete, welcome back.
Good morning, Andrew. Nice to be here.
Now, plenty of activity again this week, economic data from all over the place, really. Let's start locally. We've got the RBA meeting later today with the anticipation of another 50 basis point rate rise. Whether or not they go 75 basis points, who knows? But
who knows?
The markets.
They know.
They know.
Hopefully they know.
We'll see. I expect 50, but what are your thoughts?
I think you're right. I'll be surprised if they go 75, but who knows? You know, it's a wait and see. They've got the data. We've got Bank of England also this week. The mood is certainly accelerating as far as central bankers across the globe. So yeah, I'll hand on heart. I'll go the 50. Last week, I thought they'd hit the States. I thought they'd be 100. Yeah. There were 15% of the analysts thought that was the consensus, thought we'd see 100, they only hit 75. So, I think that's where they'll be.
And I think there's probably mixed signals at the moment as well. So obviously there's certain parts of the economy which is coming off. Yep. But other parts of the economy are still strong, as in the labour figures, which we'll talk about shortly. So, sure. Which, as we know, like unemployment, lowest it's been at probably since the 1970s,
250 years.
Yeah, whatever it is. So strong figures there, which play into the need for higher interest rates.
Yeah, if you want a job, you'll get a job. That's the whole story.
Very much so. And you sort of see that just in the market generally, not only advertisements in the paper and online, but you see it in shops now, like there's things on the window.
Where I live, I'm at Coogee, but the amount of restaurants, Andrew, over the last 6 months that have said, we're shutting tonight, we can't get any staff. Please don't be upset with our staff. We've only got so much manpower behind the till for a barista or for someone to serve a coffee. So, it's that mindset. We just haven't got enough people.
Very much so. Obviously, inflation is the key driver there. It's in the media all the time.
What are we at today?
Well, it's like that. Well, the official figure is 6.1, but like we've discussed before, in Australia, the CPI data only comes out quarterly.
Yes.
So, unlike other countries where it's monthly.
Absolutely.
So, it'll be interesting. I know we're nearly through another quarter away from the next set of figures.
Yes.
But what will that figure be?
Yeah, well, I've got to say, if it's like the States or like Eurozone, you've got to be punching above 7. So let's just, it's a flip of the coin, but we just strap ourselves in.
Yeah, so, and that feeds onto the Aussie dollar as well. So that's like, we've got a 6 monthly chart here. So the trend has changed a little bit. It did nudge over 70 last week, and it's sort of hitting that mark at the moment. So
US King dollar's coming off, US dollar index.
Which helps this. Obviously interest rates going up. The other, obviously, the big driver of the Aussie is the commodity prices, which are all sort of coming off. So that's probably, I guess, putting a bit of a cap on the Aussie at the moment. But at least it is creeping back up a little bit.
Well, when you can see that, it certainly hasn't flatlined. When you go from 76 to under 68, 67, 80, I think was the low. So that just demonstrates nearly a 9 cent move. The opportunities to trade currencies are just mind blowing, and it's. Yeah, you can see why it trades about $6 trillion a day, can't you?
Very much so, yeah. Heading over to the UK, obviously plenty of problems over there. The Bank of England has been quite...
Who's running the show this week?
Well, who knows? But it's been quite, compared to the other markets, quite restrained in their interest rate rises.
Yes, they have. They'll pick up pace, I'm pretty sure of that. Now, the other side is that they've really got high inflation. It's the numbers coming out around that 9 number. So yeah, the POMs have really got their hands full. New leaders, inflation out of control, and how hard do they hit the pedal as far as rate rises. So the 2 central banks that I'm looking at this week are certainly ourselves, the RBA on Tuesday, and the Bank of England this week.
Yeah, so well, who knows? It could be a 50 basis point rise there. So we'll see this week. And as you say, it feeds into that inflation story, which is, it's a big number. There's obviously a definite trend there.
Yeah, yes, that is it. I've been to a lot of business schools. That's certainly a trend. I think I'll go out there on a trend and I'd say, I'll be through 10%. I wouldn't be surprised the next read. So there we are, April, May, June. Have a look at July. Yeah, I think, just the acceleration is just dramatic. Yeah. Where's the end to this inflation story? That's the issue.
Well, I think the other side of it is that the central banks can only do so much with interest rates.
Yes.
And if we've got all these supply chain issues which are clearly out there, which is
and energy prices.
Yeah, forcing shortages, which in turn forces up the prices of a lot of things. So the central banks can only do so much.
And they're behind the curve.
Yeah.
They're playing catch up.
They are. So US last week obviously got now got 2 quarters of negative growth, which everyone talks about is the technical recession, but
sure is.
The economy over there is quite strong.
Well, it is, yes. The other side, we've had a big bounce last week, was very strong in equities. So, let's see how it trades, the GDP number moving forward, and more importantly, how inflation's going to be. And the Fed last week, 75. Jackson Hole this month, August, so there's no great decisions, but certainly in September, are they going to hit the pedal, another 75 coming from Jay Powell?
Yep.
So the end of this summer period is going to be one of very much interest for that US equities, King dollar, and what happens as far as the energy prices domestically in the States.
Yeah, and the current earnings season as well it's been a little bit of a mixed bag.
Yeah.
Probably better than what most had thought.
Yeah, absolutely. I mean, some of those numbers were really shot the ball out of the park. The ones that got hammered, but the ones that did well, they really performed very strongly.
Yeah.
Big confidence boost.
And there'd be a lot of cash sitting on the sidelines at the moment.
A lot of dry powder.
So coming into the back end of the year, some of those sort of very profitable large caps might see a bit of a kick along. So,
I wouldn't be surprised. As you said, and you've given me very good advice and knowledge. We talk, when the show stops here, and as you keep on saying, third quarter, fourth quarter, they've got to spend the dough. That's when they got their dry powder. That's when their ammunition's ready to be fired, and we're coming into that now. Yeah. So that last build-up over the calendar year.
And I think the fund managers as well, getting to the end of the year, they've got to look at the performance to not only get the bonus, but to get new capital into those funds.
Or lose capital from your fund to someone else's fund.
Exactly. So, finally, we got the 10-year T-note, which is, once again, this is a 6-month chart. It's pretty interesting considering mid-June we're up at 3.5%, and we're now, 2.6-ish. Yeah. Quite a drop off, which in turn sort of feeds into a bit of a rally in the equity market.
Well, exactly right. And, the rhetoric coming from, again, Jay Powell, are we going to be this time next year dropping rates in the States? So I think that's, forward looking, as that could be the synopsis there. But, when you look at that chart, Andrew, 1.75 in March, and that was the low, and we go, okay. Then the rapid acceleration to mid-June, you're at 3.5. That's double the rate. It's just an enormous move. That's where, bond traders, I used to work at Bain Refco, and the bond traders were they'd live and breathe it because, the little, each basis point. But, just incredible. That move is just dramatic.
And we probably don't hear it a lot, but at the end of the day, it's the interest rate markets which pretty much drive every other market.
100%.
So whether or not it's currencies, commodities or equities, if you understand that interest rate market fairly well, that gives you a good insight into those other markets.
And you've got to look at your 2-year. This is what our traders need to be conscious of, because the traders, they look at their technicals, but what are the fundamentals? I've got to look at that, because that's going to give me a key driver or key point to say this is how we're looking at, over the next month. This could be if that turns down, and keeps on accelerating to the downside, we might be at 2.25 very shortly.
Yeah. So, and that, as I said, that'll really feed into the equity market as well.
Yes.
A bit of a bullish sentiment there.
Well, US dollars come well off. We're at 105 now. We're at 108 for that US dollar index. And if you look at yen, well back, euro back, pound back, that from those lows that we experienced in June and July. So, currencies are, and as you mentioned, interest rate markets.
So plenty going on. The final slide of the day here, it's a bit of a busy slide, but it gives an overview of a lot of markets, where the CPI is sitting, what the real interest rate is when we look at what the central bank rate is in regards to inflation.
Yes. I like the Eurozone, deposit rate 0. So I don't get anything out of them. I got my CPI is 8.6. I've got a real central bank rate of negative 8.6, and they're thinking about hiking. So we're a long way well, we're a lot better than Turkey, second from the bottom, Andrew.
Yes, that's not ideal, nor is Argentina. But I think that chart there just gives a really good snapshot of where a lot of countries are at, because obviously we tend to just look at the probably the 6 major economies around the world.
Well, yes. But our traders are based all over there. We've got huge trader base in Turkey and Argentina and Brazil, massive.
Yeah.
Chile and Russia, Mexico, of course, Colombia, Czech Republic, yes, Poland, Peru, South Africa, huge. India we don't, and well, China's a different matter, but Indonesia, yeah, global operation, and they're really, that's for all of our traders out there. We thought we'd just give you something to look at and appreciate your own domestic economy and how it's performing to your currency because of the cross rates.
Yeah, right, very much, yes. But obviously a very common theme there, most countries are putting interest rates up, so,
yes.
Other than a handful there. So that's sort of is a fairly good wrap of where we are this week. Thanks for coming in again, Pete.
Oh, it's good to see you, Andrew, and I'm looking forward to seeing, you know, what we do here and the flavour coming into August and September. So the 50 basis points, I'll go out there and say, yes, you're right, 50 today. And where we are in the next couple of months is going to be a fascinating story.
Definitely.
Yeah.
Great. All right, good to see you again.
Lovely to see you.
Catch up next week. That was the XM.com weekly market update on Boardroom Media.